Meta has dropped below $600 a share, almost a 30% pullback from its peak. And personally, I'm buying. Right now, I'm adding small fractional positions, but if it drops below $550 or even lower, I'm going in heavier. But why is it dropping? Well, there's a lot of uncertainty in the market right now. Geopolitical tensions like the war in Iran, rising recession fears, and Meta's massive capital expenditures. On top of that, there are ongoing court cases around social media and child addiction. All of this creates pressure in the short term, but here's the thing. I believe in the long-term future of Meta. This is still one of the most dominant tech companies in the world. They own platforms like Facebook, Instagram, Threads, and WhatsApp, apps that billions of people use every single day. That kind of attention is incredibly valuable, and despite all the fear, the business itself is still growing. Ad impressions across Meta's apps increased by 12% year over year in 2025. The average price per ad also went up 9%. That's a powerful combination, more ads with higher prices. As a result, revenue grew by 22% for the full year. Instagram alone generated $83.6 billion in 2025, growing 25% year over year. WhatsApp now has over 3 billion monthly active users globally. Threads daily active users climbed to over 150 million, a 50% increase from December 2024. And Facebook is still growing, now with over 2 billion daily active users. So while the stock is down, the business is not. We are also starting to see Meta's heavy investments beginning to pay off, especially in AI and infrastructure. I'm not saying it can't go lower. In fact, I fully expect more volatility. That's why I'm not going all in at once. I'm dollar cost averaging, buying a little bit every month, whether the stock goes up or down. At the same time, I'm balancing my portfolio. Right now, I'm allocating a large portion of my capital to high-yield investments. Companies like Main Street Capital, RS Capital, and Vici Properties. They generate consistent cash flow, which gives me stability during uncertain market conditions. And compared to stock like Meta, they are typically less volatile, meaning they are less likely to drop as sharply if the market turns negative. Now let's talk about dividends. Meta's dividend is small, around 0.37%, but the payout ratio is only 9%. That means there's huge room for future growth. And on top of that, they are aggressively buying back shares. Over the last 5 years, Meta has reduced its share count from about 2.9 billion to under 2.6 billion shares. Fewer shares means each share becomes more valuable over time. So for me, this is simple. Short term, uncertainty, volatility, and maybe even lower prices. Long term, Meta hitting new all-time highs soon. And I'm positioning myself now while others are still afraid. Thank you for watching. See you in the next one. Bye bye.